Okay, well, let's get you some perspective. Our first guests joining us this week are Dean Kim, Head of Global Research Product at William O'Neill, and Arvind Sanger, Managing Partner at Geosphere Capital Management. Gentlemen, great to have both of you with us here. Thank you very much for your time. Arvind, if I can come to you first, the job addition data for January in the US was absolutely shocking, right? Shockingly strong, I should say. What does it mean for market assumptions, market pricing of what the Fed will do, etc.? Go on.
Yeah, we always worry when you get such a large outlier, what quirks there might be, what revisions there might be. We don't know yet, but there was an upward revision to the prior month's number. So clearly, something is going on in the job market, which is proving to be extremely resilient, despite the Fed's actions. And obviously, inflation has come down. But what has caused inflation to come down in the last few months, and we might continue to see it in the data coming out in a couple of weeks, is the goods inflation, right? The goods inflation has come down. Even some of the real estate inflation has come down. But I think the big challenge for the Fed is to get the labor inflation not to prove to be stubborn. And I think that will prove to be the real question mark from this data, whether the Fed is going to have to engineer a bigger slowdown to get a handle on wage inflation, because that may remain one of the bigger problems for 23.
Okay. Arvind, I have to ask you before we move on to our next guest, what your take has been on this entire Adani Group fiasco. Do you think the market can move on irrespective of what happens with the Adani Group stocks, or do you think it's sort of a snowball effect into the rest of the market, especially the financials? How are you approaching it?
Well, look, we talked a little bit about this on the budget day itself, where I said what is most important for foreign investors, and I think for Indian investors, is to see a credible decent approach by the RBI and SEBI and others to make sure there's transparency in how they evaluate and how they assess. And so RBI has asked the banks to reveal what their exposure to the Adani Group is. So I think sunlight, as they say, is the best disinfectant. And clearly, I'm hoping we'll get more sunlight and more clarity. Clearly, when SBI says it's less than 1%, maybe 0.5% of their loan book. So it's not it's not systemic as Uday Kotak and others have already said. So I do believe that the Indian growth story is not an Adani growth story. So therefore, wrapping the Indian growth story around Adani and their admittedly significant infrastructure spending is a mistake. But I think there will be some challenges because they are a very important part of the infrastructure. So we need to make sure from an India growth story that the other engines are all firing and there's complete clarity on what the government will do regarding making sure that anything that needs to come to light comes to light. So I think there are some challenges, but I don't think they're systemic challenges, and there are plenty of good companies and good managements that we can invest in.
Well, that's heartening to hear. Arvind got that point, but let's get in Dean Kim as well into the conversation. Hi, Dean. Morning. In the last week or so, we have a couple of big events that took place. One is the budget 2023, which was pro-growth, which is good news. And the other was the entire Adani fiasco that's playing out. Your view on the Indian markets, keeping both these two in mind, and you don't, you never shy away from levels you're looking at on the Nifty. So what's the range? What are the levels you're looking at on the Nifty?
Yeah, so I think, Mr. Sanger is completely correct. I mean, you can't see Adani as part of the Indian story. And in fact, when I look at some of the banks like ICICI Bank is making a recovery, State Bank of India as well. I think, the volumes that came in the last couple of days was very strong for these names. And that gives pretty good hope that the market understands that the risk level in terms of bank loans is quite small. Now, in terms of the market, I look at the Sensex, and we're currently sitting at 60,840 or so. Next support appears to be 58,700, which is 3% away. And but the resistance is quite close, 61,200, or the 50-day moving average. So I think we want to make sure that the market can overtake this resistance level. And I suppose as the Adani story plays out, and everything is understood about that situation, I think the market has a chance to reclaim that 50-day moving average. So that's what we're looking for.
All right, Arvind, the S&P is up just under 10% this year. Nasdaq is up some 16% this year. Do you think still last week before we got this number, jobs number, the general thinking was that maybe this has got more to run from here. What is your sense? Will this data point put a stop to the rally we've been seeing in the US? Is Friday's price action a sign of things to come, which is down, not up?
Well, Friday's price action was actually quite interesting because the markets opened much weaker and got a little bit weaker in the morning and then gradually, ground higher and didn't close down that much. So I think there is still hope that the inflation data that comes will prove to be more benign, and this was an outlier number. It was such a shocker that maybe there was something off in it. So I think the market is still wanting to buy the dips rather than sell the rallies. I think time will tell. My sense is that the inflation numbers are headed in the right direction. The problem I have with the inflation data is not that it's not coming down, but that it may not come down to the levels that the market is hoping for, which would mean Fed is starting to cut interest rates towards the end of the year. So I think that remains the big question. But in the short term, I think we're not going to see sharp sell-offs, but I think we may remain range-bound till we get the next inflation data in a few days. And then after that, I think we'll continue to be data-dependent. But my sense is the markets were hugely oversold. They've had a big bounce. They have a little more to go. But at some point here, we need to see confirmation, maybe by the end of the month or early next month, that employment is slowing down. And obviously, Friday's data was shockingly bad for that hope. We'll have to wait and watch what other data points give us some hope that employment is slowing down, because unless the job market slows down, any inflation coming down structurally, meaningfully is a pipe dream.
Okay, one final question from my end then. Dean, this is for you. You mentioned briefly that ICICI Bank and SBI are holding up quite well, and there seems to be an upside there. What about ITC? A lot of brokerages have raised their target prices post the good earnings that came through. Are you seeing that on the charts as well?
Yeah, if you're speaking about IT-related companies like Infosys or
No, I'm talking about ITC. If you track that.
The tobacco company, yeah.
Tobacco company, yes.
Yeah. The chart looks really good. It's broken out from a base, and that's the first thing I noticed when I was doing some, reviews. I think the stock is ready to break out and outperform from here. So it looks like it's ready to go.
For a while, right? It's been a 60% rally in the last 12 months. Dean and Arvind, thanks a lot for joining in and giving us your quick take on the market and what to expect from the big events that are perhaps lined up. Let's slip into a quick break. On the other side of the break, we'll get you all the stocks that you need to watch out for as we head into trade this morning.